The House Ways and Means Committee has introduced a significant amendment to the tax code. It's titled the One Big Beautiful Bill. This legislation proposes substantial changes aimed at providing tax relief and really simplifying the tax code. Some of its key provisions are permanent tax rate cuts. It wants to make a lot of those cuts that were first put into law in the 2017 Tax Cut and Jobs Act. It wants to make those permanent. Enhanced tax deductions. It proposes a temporary increase to the standard deduction for both single head of household and married filing joint taxpayers. It wants to eliminate the personal exemptions. So, with the standard deduction increase, it's really taken back with elimination of personal exemptions, but that really helps to simplify the tax code. And it's expanding the child tax credit. A lot of these proposals are designed to provide continued tax relief for individuals and families, and streamline the tax filing process and reinforce the reforms that really were initiated in 2017. This coming presentation is going to go more into detail on that. And if you like this, you might want to follow us. We will be giving webinars on the specific parts of it. It looks like this has a really good chance of becoming law now, and so we're really monitoring it so that we can be ahead of it. So first off, for this the One Big Beautiful Bill, you can find, I'm going to put in the notes a direct link to the House Ways and Means Committee PDF that contains all the pages to it. It's pretty lengthy, but this will really give you just a good briefing of it. So as we were talking about, for individuals, the individual tax changes are the 2017 tax rates are being made permanent. There's an increase to the standard deduction, plus a little temporary boost there. The child tax credit will continue at $2,500 through 2028, and that is for kids under the age of 17 by the end of the tax year. So if they turn 17 during the year, you don't get the $2,500 credit, you get the $500 credit, which, it's better than nothing. And that will be continued through 2028. After 2028, it will be indexed for inflation. So we're getting that. That's really a good thing. So they don't have to go back and overhaul the tax code just to increase that credit as inflation goes forward. There's no tax on tips, overtime, or even up to a $10,000 car loan or car loan interest. So these are some really huge changes that are taking place. For people in the service industry that live off of tips, that is incredible. I really didn't think this is going to go through when he was talking about it in the campaign for the no tax on tips, no tax on overtimes, and up to being able to write off the car loan interest. That was a surprise, but it's still there. Enhanced deductions for seniors, and they're still looking at the no tax on Social Security. We'll see how all this shakes out, but it's still very much in play. Business tax changes. Now, there's some huge wins for business owners. The QBI, the Qualified Business Income Deduction, which was previously 20%, is getting ratcheted up to 23%, and it's going to be made permanent. It doesn't sunset. It doesn't have an expiration like it did during the 2017 Tax Cut and Jobs Act. The estate and gift exemption amount is going to move up to $15 million. It's 11,000 under 12,000, 11 million under 12 million and change right now. It's going to move up to 15 million. That's per person, and no sunset, meaning it doesn't expire. The alternative minimum tax relief is being made permanent. This is really great because a lot of the alternative minimum taxes, it's one of those things that would get you for people making over $100,000. Well, there's a large part of the population that makes over $100,000 now. When this was first put into place, it was to make sure that those high wage, high income earners paid their fair share. They've given relief on that. That's going to be made permanent. Bonus depreciation gets extended into 2030. This is one, if I could trade a lot of the ones above to get bonus depreciation made permanent, I would. This is so big, it really helps our economy out. Really, all bonus depreciation is if you spend money on something, if you're a business owner and you spend money on equipment, on anything that they normally want you to depreciate out over time, you get that write-off all in that year, in the year that you spent it. If you have other expenses, you get to write them off in the same year. Why not? Why does that not take place for equipment? And so this allows that. Good thing is we get it for the next 5 years. Bad thing is we got to keep our eye on 2030 now. Employer child care and paid leave credits have been enhanced as well. That's something that we need to keep our eye on. I didn't put exact percentages in here because it will move around, but the child care credit right now, it's looking like it's going to jump from 40% up to 50%. And the bonus depreciation, of course, is 100% bonus depreciation, which really helps out for investment. Healthcare and HSAs, healthcare and healthcare savings accounts, there's going to be more flexibility in healthcare spending. Medicare Part A enrollees are allowed to actually make HSA contributions. Fitness expenses are looking to be HSA eligible. Expanded use of on-site clinic and direct practitioner credit arrangements. That's really opening up some of the ACA plans, some of the Obamacare at the bronze level is going to be HSA qualified. So you can have an HSA account and use the Obamacare, which previously wasn't possible. FSA and HRA rollovers into HSA they're going to be made allowable. Previously they weren't. There are some limits on that, but it's getting a lot more flexible. Education and family incentives. There's a serious boost going on for education policy. 529 plans now can cover K through 12 expenses. They can also cover homeschooling expenses and certifications. New adoption credits. They've upped the adoption credit up to $5,000, and this is actually refundable, meaning that for somebody that didn't even pay taxes, they would get that credit. A tax credit for donations there's more tax credit for donations to scholarship organizations. There's, in the legislation as it is written now, there's what's called a Make America Great Again account, a MAGA account, which is tax advantaged savings for kids. And the ABLE accounts, this is not a very looked at section of the Internal Revenue Code, but the ABLE accounts, these are usually for individuals with disabilities. Those are being expanded, and greater contributions and even rollovers, which previously wasn't permitted. For the energy and environmental shifts, there's a big green energy retreat. Most of the clean energy credits are terminated early. Even before they were supposed to expire, they're being terminated. Electric vehicle credits expire in this year, 2025, and also 2026. Strict foreign entity bans on clean energy subsidies. No foreign companies are going to get clean energy subsidies. Hydrogen and carbon capture credits phase out. Opportunity zones are actually extended to rural areas. This is a really big deal because there are a lot of really good credits for business owners who hire people in these opportunity zones. Previously, they were all kind of reserved for more urban areas as opposed to rural. Now there's a lot more rural areas that may be under the poverty line that they would like to see them get a lift up. And so those opportunity zones are being more extended to rural areas. That's a big deal. The compliance and enforcement. We've already seen this. The IRS is really tightening the screws. Social Security numbers are now mandatory for any type of educational credits and child tax credits. That's good practice, even maybe they weren't always mandatory. The Earned Income Tax Credit certification is going to be required in 2028. And previously it was kind of on the honor code, on the honor system, and it was just, the Earned Income Tax Credit is just wrought with fraud. There's so many, we call them screaming eagle tax preparers that are out there just trying to milk this and really take advantage of taxpayers. Maybe some taxpayers, some legitimate taxpayers are taking advantage of the system as well. There's also going to be new penalties on the employee retention credits, up to $200,000 per violation. They're really going after these hard. They're going to have increased audits on the ERC, employee retention credits, and the look back goes to 6 years now. And there's restrictions on regulating tax prep fees. So they're guys that are preparing taxes, they're going to actually restrict some of the regulations on those. There'll be more due diligence on the side of the tax preparer, but there'll also be a little bit more liberty for them as well as far as their fees and how they charge those fees. As always, my name is Randy Martin with IRSprob.com, IRSprob.com. If you are someone you know is having any problems with the IRS, or if you're a business owner and you want to get ahead on this and really figure out how this new tax code can benefit you, you're going to want to give us a call at 214-214-3000. Once again, Randy Martin, IRSprob.com, IRSprob.com. Telephone number 214-214-3000.